Yeah, I actually had a situation last week where a client had their money invested in a TFSA, but in the market, and it had a kind of a set amount. We were planning this for the last, 6 to 12 months. And then they've seen a recent dip of about 25, 30% in their overall portfolio in the last few months. And now they're having to kind of fill that gap through a gift from their parents. So, they had this one number in mind to get that 20% down payment. Investments shifted, and now they're needing to get a gift to get the funds to close on the house.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren.
Hello and welcome back to the Ottawa Real Estate Podcast. My name is Paul Stevenson. I am a Level 2 mortgage agent, and I'm joined as always by David Warren, owner and Level 2 mortgage agent at Referral Mortgages. We are back, and we just want to let everyone know before we get into it, if you ever have questions about mortgages, real estate, hockey, soccer, whatever you want to talk about, we're here. Our contact information is in the description. Feel free to reach out anytime. We're always here to help. David, how are you doing? How's the week?
I'm good. Week was been great. We, you and I spent most of it together up at Tremblant, which was fantastic. Enjoying the nice weather. Yeah, no, it's been good. How's the how about yourself? How's the hockey? How's JW doing?
Yeah, Tremblant was fun. Weather was fantastic. We actually sat on a patio in a hoodie, like no jacket, nothing. I got a bit of a sunburn as usual. I get sunburns in the middle of winter in a cloudy day, so not surprising. But hockey's good. Playoffs
ginger
start.
Problems.
Yeah. We have playoffs start Thursday. Very exciting. Thursday. First round against Kemptville. So let's go Canadians. Boys are back. Boys are buzzing. Finished second in the league. We're hottest team in the league right now, other than Rockland, who's ranked first in the country. So we're hoping not to meet them till the finals, and then we'll go from there. But Dave, you know what else is heating up?
What's that, Paul?
Not the market, actually. No, but we funny enough, we had a lot of comments last week. People hating, saying that numbers are down, and we do want to get into the Canadian numbers, which are actually down. But last week we were focusing solely on the Ottawa numbers because the stats had come out from OREB. So we were talking about Ottawa stats. So it wasn't a matter of, again, pumping the market. We do have our pumps with us constantly. But no, the numbers are what they are. I mean, listings were up, sales were up, prices were up mildly. So, things are up in Ottawa. Now, outside of Ottawa, it paints a bit of a different picture. So we are going to touch on that today. One thing I wanted to bring up quickly, last week we were talking about the youth employment, the labor market. Here's the chart. The youth labor market looks different, it says. So this is a percentage change since June of 2022. So what I found most interesting about this chart, this was from Stats Canada, and Indeed actually created the chart, but it shows an employment line, basically metric, and then a population metric. So you can see between ages 15 and 24, big uptick in population, but the employment stayed very low. So there's a huge delta there of about 12, 13%, it looks like. And then for people over the age of 25, the employment and population is almost right on par, about 7 or 8%. So I just found this, not surprising, I guess, given the numbers that we're talking about last week, that there's a lot of youth not entering the basically employment, the labor force. And likely for this reason, we did have a large influx of population, and I don't know if there's just not enough jobs available, but that's a pretty big delta, that there's no jobs for a lot of those youth. So it's maybe not even a matter of them not wanting to enter. There might be no options to enter, So I thought this was a very interesting chart. What do you take away from this chart, David?
There's a similar chart that I saw, and in the entire Canadian workforce, and it was following the same lines, because it really does follow the same trajectory of, kind of divergent lines of population growth and actually productivity maintaining the same and actually dipping. And so similar to that employment chart. And I think, really what it's kind of focusing on, I think it's just, where we are with retail. A lot of those, that age demographic is getting, first jobs, or kind of those, introductory jobs to the market where retail has been slumping drastically. Companies are not able to hire for those positions because they just don't have the sales to be able to sustain it. So I think that's certainly playing into it. I bet it's not that they're not wanting to work. It's that they just can't find something. Right now, with where the market's at right now. Hopefully, as we see and continue to see the Bank of Canada lower bank prime, and hopefully the retail market picks up, that it will help those that younger demographic at those introductory jobs. But certainly, like, I know restaurants aren't hiring really, things like that. Their sales are down dramatically. When I talk to any restaurant owners, they're seeing that same. And so it's a lot of, those servers, bartenders, at your retail stores, things like that.
So do you think this is I mean, there's a lot of things happening. Renewals, obviously, I think I saw some this morning said, 2 million renewals or something coming up in the next few months. But do you think this is a combination of, obviously trade, the tariff wars, whatever you want to call it, obviously the cost of carbon going up. Now the tax break just ended. We had that tax vacation for 2 months, which we're going to touch on as well. But I mean, the cost of everything, as we know, has gone up. So, I mean, even you go to a restaurant, you get just a burger platter. It's now, the starting prices are, $25, $30, or, even if you can get a $20 burger and fries, you're doing really well, at just a family chain restaurant. So the cost of everything has gone up. And I think the combination of people's own personal expenses going up has probably caused a lot of these shifts as well. One of the things, the perfect segue, this was not on purpose, but I love it. So I had an article that I saw this morning. It says Canadian household net worth climbs as assets gain, but debt levels also rising. This was from Canadian Mortgage Trends. So it says, here's a summary. It says, in the fourth quarter of 2024, Canadian households experienced a net worth increase of $236 billion, which is 1.4%, bringing total household wealth to $17.5 trillion. This marks the fourth consecutive quarter of growth, totaling nearly $1.2 trillion for the year. So, I mean, an increase in net worth is obviously a good thing. That's what we would hope, I would imagine, in any country. Here's a breakdown of the asset growth. So it says financial assets. So they increased by 2%, which is $215 billion, to $10.8 trillion, driven by stronger domestic equities. So the S&P and TSX Composite, which is the Toronto Stock Exchange, it rose 3%, outperforming the S&P 500. A weaker Canadian dollar further boosted the value of foreign investments. So anyone who invested in, obviously, outside of Canada or in U.S. companies or U.S. dollar equities, with the Canadian dollar decreasing, that obviously bolsters the value of your portfolio, right, in Canadian dollars. Residential real estate, so the value of residential properties grew by 0.6, for everyone, to $8.35 trillion, recovering after mid-year declines. The average resale price rose by $30,000 from the previous quarter. Credit market, here we go, debt levels. So debt levels on the flip side, so credit market debt, it says, surpassed $3 trillion for the first time, with borrowing reaching $40 billion, the highest level since mid-2022. Mortgage borrowing led this increase, climbing $5.3 billion from Q3 to $29 billion, as lower rates and improved consumer confidence drove demand. Non-mortgage debt, including credit cards and personal loans, surged to $37.9 billion in 2024, up from $23.6 billion in 2023, 31.8% increase. That's pretty wild. Debt to income ratios. This is something we consider often when we're analyzing mortgage applications, is what percentage of your overall income, your gross income as a household, is going towards your existing debt as well as this new mortgage costs. Debt to income ratio edged up to 172% in Q4, meaning Canadians owed $1.73 for every dollar of disposable income. Is that surprising? Yeah. Debt service ratio fell to 14.35%, its lowest level since 2020, thanks to declining interest rates. And then savings rate. So this is interesting. It says the household savings rate dipped to 6.1% in Q4, down from 7.3% in Q3, as spending grew 2.1%, outpacing disposable income gains by 1.1%. However, investment activity remains strong, with net acquisitions of mutual fund shares hitting $52.6 billion. What does it all mean, Basil? Hey, David, that's what he said last week. It says, despite the growth in net worth, elevated household indebtedness remains a significant concern. and risk to the Canadian economy. So this all plays in. Obviously, Bank of Canada dropped the rate again, the overnight rate to 2.75. So all this stuff factors in, right? All this like inflation, savings, debts, all these things are kind of factored into that decision by the Bank of Canada. I just threw a lot of numbers at you. I don't know if you have them in front of you there as well. But what do you take away from those numbers?
I think the non-mortgage debt is, again, just a signal of where we are as an economy. We're propped up by credit right now. We haven't had rising income on par with inflation across the board. So that increase from, effectively 24 billion in 2023 to 38 billion in 2024, I think that can't come as a surprise. I mean, really, we've been propped up by social spending through COVID, and then now that's not there, and people are having to rely on their unsecured debts in order to get by, to make those mortgage payments. So they always say that people will pay their mortgage before their credit card because they want to stay in their home. I think people are likely borrowing from their non-mortgage facilities to be able to fund their life and kind of keep up with the Joneses, if you will, while making their mortgage payments. And so that's why we've seen a slight uptick in defaults on mortgages. But when I say a slight uptick, it's still less than 1%. Like it's the default ratio on mortgages is outrageously low. And so I think it's going to continue. I think people are hurting. I think if the tariff situation continues to be in flux, we've seen the equities market, the NASDAQ and the NYSE and the TSX lose a huge chunk of people's savings and life savings wiped off the board in a matter of 2 days because of this uncertainty. So that's just going to play into people not being able to cash in on their investments because of timing. And again, they're going to rely on not unsecured debt in order to fund their livelihoods. So I think we're going to continue to see that continued uptick while there's a lot of uncertainty in the market through various different facets.
Yeah, I actually had a situation last week where a client had their money invested in a TFSA, but in the market, and they had a kind of a set amount. We were planning this for the last, 6 to 12 months. And then they've seen a recent dip of about 25, 30% in their overall portfolio in the last few months. And now they're having to kind of fill that gap through a gift from their parents. So, they had this one number in mind to get that 20% down payment. Investments shifted, and now they're needing to get a gift to get the funds to close on the house. So these things do happen, and this kind of speaks directly to that. You can't predict what's going to happen in the market. So if you are looking to buy a house, maybe in that last 6 months or so, shift that into a money market fund or whatever it is, so that you can at least have that certainty that that's going to stay the same and not have to scramble last minute.
Now, something to keep in mind for those of you that are first-time home buyers, you can withdraw from your RSPs even after closing. So it's not something where it has to be done prior to closing. You actually technically can withdraw after the fact. So if you have seen a dip and you have had to get a gift from family, you can, and you see your investments rebound at a later date. You do have, I believe it's up to 12 months from when you buy your first home in order to withdraw those funds. So something to kind of keep in mind.
So the other thing I was reading this morning, Dave, that just came out hot off the press, inflation. Inflation jumps to 2.6 as tax holiday comes to an end. So we had that tax holiday up until February 15th, I believe was the end date. So it says in February 2025, Canada's annual inflation rate rose to 2.6, up from 1.9 in January, surpassing the Bank of Canada's 2% target midpoint for the first time in 7 months. Contributing factors, so the end of the GST, HST tax break. So we did have the temporary goods and services tax and harmonized sales tax exemption on select items effective from December 14th of last year till February 15th of this year. And that concluded mid-February. This reintroduction of taxes on eligible products, including food and beverages, children's clothing, and toys, added notable upward pressure on consumer prices, obviously to be expected. And then broad-based price increases. So beyond the tax changes, prices rose across various sectors. Notably, food purchase from restaurants declined at a slower pace year over year. We were just talking about that beforehand without knowing this. In February, so down 1.4% compared to January. Similarly, prices for alcoholic beverages purchased from stores declined 1.4% in February, following a 3.6% decline in January. So again, retail spending seems to be on the decline. I'm sure some of those alcoholic beverages coming from the tariffs, removing all the U.S. products off the shelf. I would assume that probably had an impact on the alcoholic beverage sales as well. It says monetary policy implications. So the unexpected rise in inflation has led to increased speculation that the Bank of Canada might reconsider its monetary policy stance. Prior to this data, the Bank of Canada reduced its key policy rate by 25 basis points to 2.75 last week, aiming to counteract economic uncertainties stemming from the escalating trade tensions with the U.S. The central bank now faces a challenge of balancing the need to support economic growth with the imperative to keep inflation within its target range. So the end of the GST tax holiday and widespread price increases have contributed to a higher than expected inflation rate in February, prompting considerations for potential adjustments in monetary policy.
Yeah, the market was expecting a 2.2%, so it really shot well above that as well. So yeah, I mean, this information is not good for the overall economy of kind of having that inflation bump up. Certainly not. This morning we saw the bond market jump by 6 basis points as well on this news. So that we'll see where that kind of trends or goes and how that affects fixed rates.
Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Geltin Poirier Avocat Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most.
Certainly the problem with the tax break is that it skews data. So even, last when the data came out last month, it was, based on removing taxes from spending. So the figures were substantially lower. And then this obviously comes in much higher because they've added that back. That's kind of, it's a double-edged sword. You've got the good side of having that tax break, which was, short-lived, but nice. But then from an economic standpoint, it does skew the data on a go-forward basis. And so you get, you get jumps like this that wouldn't have been at such a drastic jump had that been, had the tax break not been imposed. I think the alcoholic beverage sales kind of isn't surprising. Like dry January is a very common thing. So I think that's pretty, that's to be expected in my opinion for the lack of sales there. But certainly this will play into I think it's April 16th decision by the Bank of Canada. And then there's a halt in May, I believe, and then another decision in June. So, a lot to come over the next, relatively 30 days. Again, have a new prime minister in Mark Carney, and supposedly he's going to call an election when he's back from his European tour. And so how that plays into things for the Bank of Canada and that decision there. And then obviously how things change, escalate or de-escalate with the US, but we'll see. I mean, I think we could also see inflation jumping in Canada over the next month through March, simply from people not taking US vacations. I was listening this morning on the radio, them talking about the number of travelers going into the US is the lowest it's been since 2022, when there were quarantines enacted, et cetera. So all of those dollars that would be spent, and obviously, that plays into the tariff situation, but also the dollar being so terrible, but people taking that March break holiday, within Canada or not going somewhere. So I'll be curious to see how the March numbers also come out, because obviously if people are spending that money domestically, is obviously a good injection of cash here and what we should be doing, but it can also play into driving inflation because that demand is picked up. But I think we'll obviously things change on a dime, and really, I think time will tell, and really this over the next few weeks.
Yeah, I have a question for you. I saw that Carney has temporarily halted the carbon tax, which I know the Conservative government or Conservative Party has been pushing for many months. Now, after many years of suggesting that this was needed for Canada, like, what is your perception of what's happened with the cancellation of that? 'Cause I was listening to an interview yesterday where he was saying that carbon is going to be included in all sorts of trade agreements moving forward. So is this just a temporary halt to the carbon tax, or have they canceled it? Like, what is happening with that?
From all indications, that it's a halt on it. I think they know that it's the Liberal Party knows that this is a hot topic for Canadians, and what has driven a lot of people away from the Liberal Party, or being, kind of skewing those polls, is directly related to the carbon tax and the impending increase. It was supposed to like triple in April or something like that. So, so certainly that halt is not a cancellation. It is just that, a halt. And I think that's obviously due to an upcoming election that the Liberal Party is going to call next week, supposedly,
right,
and try to obviously sway voters. Every indication from Mr. Carney has been that he's for the carbon tax, and all of his party of MPs have all voted in favor of it unanimously. So I don't know, if they're elected again. Certainly I'd be surprised to see if they don't reenact it in one facet or another. It could just be, labeled as something else, or put a different bow on it and a different spin, and not call it a carbon tax and call it something else, but effectively the exact same thing, because Carney has been speaking about it and for it for many years. So, well, I think that we'll see, but certainly in the here and now, that halt, hopefully we'll see the gas prices come down a little bit, and that help the economy, and obviously, farmers not, their costs not being driven up, which then obviously ripples down the line, as we know that any impact on the bottom, that the farmers of where the food is grown, or the truckers of moving that product, or the airlines moving that product, it's, that obviously ends up costing consumers more. So we'll,
exactly.
I mean, I don't know that it'll be immediate. I don't think we're going to see like 20 cents off a liter at the pumps immediately. Now that we've become accustomed to it, that's where also my skepticism of like profit margins for companies kind of is in. People psychologically are used to paying a certain price, even if the cost goes down. Are those corporations going to pass those savings along? I think that's a whole different topic.
But not least, third article, I just wanted to touch on quickly because, we're accused of pumping the market here constantly, David. So here is an article: Canada home sales fall to lowest in more than a year as trade wars escalate. So this was a Financial Post article. It says in February 2025, Canadian home sales experienced a significant decline, dropping 9.8% from January, the largest decrease since March 2022, and falling 10.4% compared to February 2024. This downturn is largely attributed to escalating trade tensions between Canada and the United States, which have created economic uncertainty and dampened consumer confidence. So some of the key factors influencing the decline: trade tensions, regional impact. So the GTA was notably affected, with home sales plummeting 28.5% month over month in February, following a 12.4% increase in January. So year over year, sales in the GTA decreased by 27.4%. Price adjustments. So the national average selling price declined by 3.3% compared to the previous year, while the home price index edged down 0.8 month over month. New listings, there was a 12.7% drop in new home listings from January, which I actually thought was surprising, because given all of the things we've talked about, you would think that like listings in Ottawa skyrocketed, right? They were up, I think, 1,200 year over year or something crazy like that last month. So having a 12.7% drop in new listings, to me, is actually very surprising given all these other stats. So in summary, it just says the ongoing trade tensions have introduced significant uncertainty into the Canadian housing market. Potential homebuyers are adopting to a more cautious approach, and sellers may need to adjust expectations in response to shifting market dynamics. The duration resolution of the trade dispute will play a crucial role in determining the housing market's trajectory in the coming months. All very good points. The listings was the biggest surprise for me because to me it seems like, if people are struggling financially, we have a lot of people up for renewal. You would think the listings would be at least up even a small percentage, but down 12% seems, like maybe we're missing something from last January. Maybe there's a reason why there was so many listings last January,
I think it also speaks to a point that we bring up very regularly is that every market is different. The Ottawa market is significantly different from the Toronto market, even though we're only 4 hours away from each other, and different from the Montreal market and the GVA and Calgary. Every market is different. And so to me, what this speaks to is exactly that. When people are listening to what we're experiencing or what is going on locally and try to attribute that to on a national level, it's not going to parlay all the time. So we're seeing the new listings drop in certain markets, that have higher figures than Ottawa. So, we've seen that listing number increase. We saw the days on market decrease for February, but we did see the number of listings increase. I think it was 4.6 months or 4.8 months or something like that it jumped to. But again, it's, every market is different. Every area within that city is also different. And, we've talked about it for years on this of making sure you get the proper advice from a professional that knows that market, and not just, an armchair commentator that is speaking to national figures or, kind of speaking to a broad, broad comment about
YouTube channels.
Yeah. 100%. I think that's something that I take away from this of to exactly what you mentioned of that 12.7 drop, where we've seen it in Ottawa, the complete opposite of that increase in new listings.
Great summary, David. Great summary. How do you feel about some boosts? I think we need to, after all that doom and gloom of
just boost me.
Today, I got 5.
Wow.
Yeah, this is going to be good. So here we go. Number 1, I tried to start a band called 1023 MB, but we still haven't got a gig.
Wow.
Number 2,
wow.
I opened a bakery that only sells bread shaped like boomerangs. Business is slow, but the customers always come back. Everybody likes the boomerang joke. Number 3, told my plants a joke. Now they're rooted in laughter.
Mm-hmm.
I'm going safety in numbers here. Number 4, I started a support group for people who talk too much. We call it On and On Anonymous.
Okay.
Here we go. Last but not least, I tried to eat a clock once. It was time consuming, especially the seconds.
Okay. Finished off a little better.
Yeah.
Finished off a little better.
Not great. Thank you, everyone, for tuning in. Thank you for listening. Thank you to our sponsors, Gertin Poirier Avocat Lawyers. They're located in Beechwood. And then we also have Westboro Big Insurance. Westboro is Brian Powell, awesome agent. If you need to speak to someone, call him. And last but not least, Centum. Thank you so much for our support. Chris Turcotte was supposed to be here today, but he was unavailable, so we're going to reschedule him. He's the president.
But he bailed.
Thanks, Chris. But Chris is going to be on to give us kind of, he's out in the West Coast, so he's going to give us kind of the West Coast view of what's happening in the market with our agents across the country and so on. So be a good person to have on. Great insights. But David, thank you for your insights. Thank you for your knowledge, for sharing it with us every week.
Thank you, Paul. Thank you. Deuces.
Bye. Bye, everyone.